Key Fed speak from the Fed's Christopher Waller this morning, seeming to lean against a full-point rate hike despite another hot inflation report this morning. Let's get to Steve Leisman with all the very latest. Steve?
Yeah, and Kelly, it's nuanced. Fed Governor Chris Waller throwing some doubt on the idea of that full percentage point hike at the upcoming Fed meeting, saying this morning that the market might have jumped the gun at least somewhat.
The markets may have gotten ahead of themselves a little bit yesterday, that they just assumed it was going to go to 100 after that report. And we don't want to make snap policy decisions based on some knee-jerk reaction to what happened in the CPI report.
All right. At the same time, Waller, who has been, as you know, one of the more hawkish Fed officials, didn't rule out a 100 basis point hike. He said he has to look at the data over the next couple of weeks to make the call. If the inflation data is worse, he said outright, he could support that bigger hike. Either way, his comments, I don't know, they shouldn't have provided much solace to the markets. Waller was firm in supporting 75 at the upcoming meeting and said he thinks the Fed needs to move rates beyond the neutral zone of 2.5 to a restrictive level. Still, Fed funds futures did ease a bit, as Kelly said. Now the peak is in February instead of January at 360 instead of 370. The Fed is priced to back off to just around 3.1% by the end of next year. The volatility reflects uncertainty, deep uncertainty over the economy and Fed policy, and they're moving right now with almost every Fed utterance, Kelly, as you know.
Yeah, and it feels very dynamic because they're talking about some of the market's inflation expectations, and, you know, that those figures change a lot in real time. You know, the consumer piece of it a little more sticky, depends on what happens with gasoline prices, depends on the president's Saudi trip. Like, so much depends on what we're learning day by day here.
I think that's right. But there's another thing out there, Kelly. I don't know if you read Krishna Guha's pieces, but he's been very critical of the Federal Reserve and the lack of a framework here. The market only moves in these kind of bands and ranges because it believes it's within the possibility or the reaction function of the Federal Reserve. If Powell were to step forward and put some additional guidance on that, the market may not be quite as volatile. The question is, does Powell have that framework, given all of the uncertainties that you just laid out? It may be very difficult for him to do it, but the market is moving within a range that it feels is plausible, given what the Fed has told us.
That's interesting. And maybe, I guess, sort of a final comment would be, we know policy rates, even as much as they've raised them, are below neutral. You know, even Waller, I think, said 2.25. So maybe the Fed could explain to us why not just get it to 2.25, you know, from where we are from here. Like, what are the decision points that go into, you know, why we shouldn't already be at that level?
It's funny, Kelly, because to answer that question, you've got to dig up the speech last week by Esther George, or maybe it was this week. It's been such a long week.
Right.
Esther George laid out why not get there so quickly. Esther George is very worried about the ability of markets and the economy to adjust to these big rate hikes. And I don't know if you noticed, but some corporate bonds have blown out. There's been a little bit of disruption there. And so Esther George, what she wants to do is make sure the Fed reduces its balance sheet. She does not want to see another taper tantrum or another kind of situation we had in 2019. So she's the one who is, even, as you remember, one of the most hawkish members of the Federal Reserve.
Absolutely.
Wants the Fed to move in a more predictable manner so as not to create the kind of volatility that might disrupt the Fed's plans to reduce the balance sheet.
And she was the dissent last month, right? I think.
Absolutely, and she's sticking to her dissenting guns, if you might. And her speech really explained in greater detail why she did that. And honestly, Esther George, you know, plain-spoken Midwesterner, makes a whole lot of sense to me. You know, I don't remember ever, Kelly, and you know I've been doing this for a long time. You have too, but just doesn't show quite as much. I don't remember any of this volatility going in 2 weeks before a Fed meeting. Could be 75, could be 100, and then you go into the meeting, you think it's going to be 50. The Fed surprises you with 75. This is why people like Krishna Guha, a former Fed official, one of the most sober Fed watchers I know, is writing with some consternation about the lack of a framework from the Federal Reserve for dealing with this inflation.
Steve, for what it's worth, you don't age either. If I had it before, you look the same the entire time. Steve, thank you very, very much.